In today's video, we're going to take a look at Amazon, and I believe that there's a lot of you who don't know how to manage your trades. I mean, I know that I can give you an area of support or resistance and you can get involved in the trade and place your initial stop, but how about management of the trade? So let's talk a little bit about Amazon and where this last low was put in, because this gives you a good background for why I'm watching resistance on the flip side. So this last low that was made into November 20th was made pretty much on top of symmetry, where this decline into the November 20th low was very similar to some of these other declines. So this was 364 points, this was 368.64, and this was 365.40. That's where some of this possible support came in, and then there was also an extension of the prior low to high swing. So we had some timing parameters also with this low. It was coming from the fact that we had some time symmetry with other prior swings. We had a decline of 8 trading days down, which was similar to 9 trading days down, and then this 8 days down was equal to this decline. So you had time and price at this last low. So gorgeous rally. You've seen a rally of $276 off of this area. So why do I have to become cautious right now? Well, for a few reasons. Number one, the prior largest rally swing lasted 7 trading days, and today was 7 trading days up from this last low. Okay, so that may offer resistance to the rally. What else would? Well, the bearish pattern of lower lows and lower highs. It's still bearish unless it comes above this prior swing high, right? At least on the daily chart. So between the bearish pattern and the fact that we are just about to kiss the 200 simple and we're still below the 50 simple, those averages will often, bring in some resistance. So bottom line, we have some time resistance with 7 days up and 7 days up. We have some price resistance that's coming in with the averages, also a projection of these two prior rally swings. Actually here, this swing was 311.18, this swing here was 307.64, and the current swing here is 276. If it's going to end up becoming similar to some of these other swings, this is where the resistance really comes in, 1726 to 1735 area. So bottom line, if you're in on the long side in Amazon, it's a really good time to ratchet up your stops, just in case. I mean, we might just continue to rally from that low and we may shift patterns again, okay? But we don't know that that's definitely true, so what do? You ratchet up stops, and you can do that on a lower time frame chart. So for example, we have, let's see, we've got a prior swing low that you can, place a stop underneath, rather than, your initial stop probably would have been either under here or under here, because we did have the crossover here where you had the 834 EMA crossover to the upside. You also took out a prior swing high. At that point, it was, okay to be long, and you might want to just ratchet up the stop to underneath this prior swing low at 1676.56. That's one way to do it. For those of you who want to, maybe give it a little bit more room, what you can do is you can take 100% of these prior declines, project them from any new high, and as long as we stay above that, stay in the position. But bottom line, you don't want to leave original stops in. You do want to trail up the market as you go, whether it's underneath swing lows or what. Anyway, have a great weekend, and I'll see you guys Monday.